Hello everyone, I hope everyone had a great Christmas and it's almost 2025 and I'm making this video unfortunately to announce some bad news because I think there's going to be a very serious bear market in 2025 running into at least the first half of 2026, and I made this video because I want to save my friends a lot of money and in fact help them make some money. And let me explain the reason why I'm making this video, all right? So I am not actually a topless chef. I'm not even a chef. I just made up that name because it's a funny name. I used to work in the bank on the trading floor, and I now trade for myself. So I buy and sell stocks, and I also trade futures, okay? Not only buying stuff, betting on them going up, but also betting on them going down. And I see a very serious bear market coming, and the S&P 500 falling by at least 40% because of the run-up we've had in technology stocks and in cryptocurrencies, which has taken us into serious bubble territory. And if you do not believe in me, then you should believe this guy, Warren Buffett, who runs Berkshire Hathaway, and they have been selling stocks for the last few months and exited their position in Apple and now hold 30% cash, okay? And Berkshire Hathaway has never held so much cash before. In fact, on one of the forums, I found a very funny comment where somebody said that they think that Warren Buffett has sold so much stock because he's getting ready to die and he wants to donate all that cash. That is not the case. Berkshire Hathaway has sold all that stock because Warren Buffett sees the dog poo hitting the fan, okay? And the markets are gonna have a big meltdown. Now, let me explain why this happens, okay? Okay, so first of all, I am no longer a licensed financial professional, so I cannot actually give a proper sell recommendation, but I can tell you that I have shorted the market myself, okay? And I will tell you my exact trades as I make more videos in the next year and a half. But take a look at these charts, okay? The first chart is the Dow in 1929, and the Dow had about a 15-year run-up of a bull market, which got steeper and steeper, and near the end, the gradient of the rise was very steep, and that is a classic example of a bubble, okay? And then the Dow famously crashed and caused the Great Depression, and it fell for 3 years and lost like over 80% of its value. The second chart is the Nikkei in 1990, which had the similar scenario where it ran out for like a good 15-20 years. And then it popped in at the beginning of 1990, and then the market went down, and then Japan's economy went into stagnation for the next 30 plus years. And the last chart is the technology bubble, the dot-com bubble, when everyone was getting super excited about the new internet in the late 1990s, and everyone's pushed up the prices of technology stocks, especially internet stocks and internet equipment stocks, and that popped in March 2000, and then the market, the Nasdaq, fell by over 78% over the next 2 years, and that also caused a recession. So in each case, the economies were running very well, actually running overheated, and the bubble bursting actually caused a recession, which caused the stock market to fall even more, okay? So let's use the latest example, 2000, which very much resembles the current trend in technology stocks. Everyone was buying into internet-related stuff, internet companies and internet equipment companies, and then the price-earning ratio was very high, and the analysts at the banks were doing analysis based on future earnings, okay, so forward PE, okay, and making estimates of how all these internet companies are going to make a huge amount of money another 2, 3, 4, 5 years down the line. And that didn't happen, and instead the economy went into a recession as the bubble burst, and all their earnings actually evaporated, and they actually went into a loss. And then a lot of these internet companies basically went out of business. A lot of the internet equipment companies actually went out of business. And we're getting the same repeat, but it is now artificial intelligence, okay? So what happens with all of these charts, which look almost exactly the same, is that you get a very steep run up, and that is from all the influx of all the retail investors going into the market and pushing it up. The problem with a very steep rise in asset values is that you need a constant amount of money to be input to keep pushing the market up. As soon as the money runs out, the market will not plateau and just go sideways. It will always tank, because the first people who start taking profits will trigger more profit taking. And that is the initial leg down, which happened in the NASDAQ between March and May of 2000, okay? And the economy was still okay at that point, okay? So the economy in 2000, the real GDP in late 1999, 2000 was running at 7 to 8%. And I'm using real GDP because inflation now is actually higher, so the real GDP now is actually lower than it was in 2000. Yet the bubble bursting to put a brake on the economy, and the economy went into a recession, all right? And it doesn't matter the triggers, okay? Back in 2000, the triggers was basically a very prominent analyst called Abby Cohen gave a sell recommendation after being bullish for many, many years. And also Alan Greenspan started raising interest rates, and that was the prick for popping the bubble, okay? And after the first leg down, there's always a rebound, and this happens in all those charts as well. And then the market seems to stabilize for a bit, and then you get a much bigger leg down. And the reason for that is the first leg down causes a lot of people to no longer be making as much money, and the people who bought in the late stages of the bubble are actually losing money, so everyone starts spending less money. And then companies react to that by also cutting their spending, and then you get a vicious cycle. So everyone starts cutting spending, and then companies make less money, so they cut spending even more and then start laying off staff, and obviously that causes a recession. And in 2000, even the red hot economy went into recession very, very quickly by the end of 2000. And when the data, economic data starts going bad, that's when you get the second leg down, which is the serious leg down in the bear market. And we have just had the pinprick, which caused, in my opinion, the beginning of the current bear market, all right? So on December the 16th, I started warning all my friends that I think the bull market has come to an end, and that was when the Dow was down 8 days in a row. And then on December the 18th, the Fed had a meeting, and they announced that in 2025, they're only going to cut interest rates by 2 times instead of 4 times. And then the market dumped 4% for technology stocks, and cryptocurrencies also took a huge dump. And that was the 10th day of the Dow being down, which is the longest period it's been down for 50 years, all right? And that is a huge warning signal to show that the bull market has come to an end, okay? We did have a rebound just prior to Christmas, which is normal because of the Santa Claus rally. And but then there was a real warning sell signal on Friday, December the 27th, because then technology stocks started selling off again as 10-year Treasury note yields went over 4.6%. And that for me is basically a clear sign that the market is going to dump some more, because during the Christmas period leading up to the first 2 trading days of the new year should be the strongest period of the year, and there should be no sell-off. And we'll see. Right now I'm recording on basically Monday morning in Asia, which is Sunday evening in the US, and we'll see if there's some follow-through selling on Monday, because there's been other bad news that's come out over the weekend. Now I'll explain. All right, so there are several reasons why the stock market really should have a serious dump now, because there are lots of currents going against the stock market. Okay, first of all, the Federal Reserve and the European Central Bank has been reversing quantitative easing for some time, draining liquidity and money out of the system. They've been doing it since the beginning of 2022. And in fact, that triggered a mild bear market from the beginning of 2022 until October 2022, okay? People who were invested in the market will remember that period. But what is very strange is that after that mild bear market, the stock market then went crazy again, and so did the crypto market, even though money was leaving the system. And why is that? It is because now there are so many retail investors selling everything else, okay? Selling bonds, selling their investments in developing markets, in small cap stocks, and just piling it all into large cap technology stocks and into cryptocurrencies to basically push this market even higher, even though there's money actually leaving the system. Which is why this rally, this bubble that we've had is really going to run out of steam, all right? That is reason number one, okay? Reason number two is that bond yields have been continuing to climb and inflation is coming back somewhat. And as bond yields climb, we're talking about US Treasury bonds, it increases also the yields of corporate bonds, which makes financing costs more expensive for companies, so it will depress their earnings, okay? So earnings will get a hit, and also as bond yields go up, then it is more attractive for investors to buy bonds again, and if the stock market starts tanking, then they're gonna go into safe havens of buying bonds, all right? So the yields will probably go up even more because over the weekend, Janet Yellen, the Treasury Secretary, basically announced that the US is going to hit the debt ceiling again on January the 14th, and the Treasury Department will have to use extraordinary measures to basically play around and not let the government default while we hit the debt ceiling. But the politicians in Congress will have to basically come to an agreement and raise the debt ceiling again. And knowing the political situation in the US, I think there's going to be a delay in that, which will cause the market to be unnerved. But it doesn't even have to come to gridlock in Congress. Just the fact that Janet Yellen announced over the weekend that the debt ceiling is going to be hit again pretty soon will push Treasury yields up even more this week, which in my opinion is going to cause a meltdown even more. And if we melt down any more, then we're going to break through some serious support levels, okay? And the last reason why I think there's going to be a huge meltdown is because Trump has already announced that, and I think everyone knows that he's going to start a trade war, which is going to hit the economies of America's trading partners and the US itself, and increase inflation at the same time for America. And for a lot of other countries when trade comes to gridlock, all right? So all bad news going into January 2025, all right? And the market will always trade ahead of the real economic changes by at least 6 months, okay? So the market is not gonna wait, and people are gonna, the smart money, okay, the retail, the institutional investors are gonna be selling off big time. In fact, that's why I'm saying Warren Buffett is well ahead of the curve and has been selling for several months already and raised his cash levels, all right? So do we have any confirmation technically in terms of the charts for a reversal? Yeah, we do, okay? So if you look at the Bitcoin chart, on the monthly chart, we have in December what is called an inverted hammer, okay? So Bitcoin rose very rapidly, and all the cryptocurrencies rose very rapidly in November and then spiked up in December, but then reversed and closed down, and you have this big red bar that's closed down despite having gone up mid-month, and that's called an inverted hammer. And that's a classic reversal pattern at the end of a rise, because all the late buyers of cryptocurrencies are now making a loss and being held at the top of the market where they're making a loss. And if the market declines anymore, it creates more selling pressure as they get margin called for any investors that borrowed money to sell Bitcoin, and also for anyone that's just basically cutting loss, all right? So you're gonna start getting more selling pressure. And on the daily charts on Bitcoin, the important level to look at, which is drawn by this support level, is 93,000, okay, which we're hovering at exactly right now at the making of this video. And if we break 93,000, we are going to go back to 70,000 or lower on Bitcoin very, very quickly before we even get a bounce. And I think on Bitcoin, we're going to go below 30,000 by the second half of 2025. Just my opinion, all right? And on the S&P 500 on the daily charts, if you look at this chart, we have already formed what is called a head and shoulders formation. Okay, so the left, the left bump is the left shoulder, and then there's the head, which is the market peak, and then the market sold off on December the 18th as a result of the Fed announcing fewer rate cuts. Then we have the right shoulder, which formed over just before and just after Christmas, and now we're getting a sell-off again. And the confirmation of the head and shoulders is if we break 5,800 on the S&P 500. Okay, we've already broken the short-term trend line, the uptrend, and we're coming back down. Okay, if we break 5,800, then the market will very, very rapidly dump as it picks up momentum. All right, and I just want to stress, my friends, I cannot give anyone a sell recommendation. Firstly of all, I can't do it for legal reasons, and second of all, if I tell people to sell, then if I get it wrong, everyone's gonna hate my guts. But if I get it right, nobody's gonna buy me dinner. However, my confidence in the market tanking is so high, I decided to make a video about it so that if any of my friends wanna tag along and sell, then that's up to them. But in my opinion, I'm trying to help people save their money, all right? And I'm confident enough that on Friday, just before the market opened, I shorted S&P futures at 6,010, okay? And in my opinion, I don't think we're gonna see 6,000 again on the S&P 500 for a good 7 or 8 years, which is exactly what happened after the tech bubble burst, okay? I'm not exaggerating, history will repeat itself, all right? So for all those investors who think that this is just gonna be a mild correction and we're gonna bounce up and the party goes on and everyone prints money for themselves and makes a huge amount of paper profits, look, if money was that easy to make, everyone would be a billionaire, okay? The bubbles that form are a gift for investors to basically cash out and make a killing and then sit out of the market for the next 2 or 3 years, all right? The long-term average performance of the stock market is like 7-8%, okay? You're not meant to get 20-30% returns every year that we've had in the last 2 years. That is not normal. And as I mentioned, the steep gradient of the end of a bubble is what causes it to crash in the end, because there's no more influx of money into keeping the bubble afloat, okay? And it always tanks. History has shown it many, many times. And I've been on the forums and a lot of people say, oh, this time is different, AI is different. That's what they said about the internet 25 years ago, okay, when the tech bubble was bursting, all right? Understand what is happening, folks, all right? So basically, I shorted I'm gonna put my money where my mouth is. I shorted the S&P 500 at 6,010. On the market close on Friday, I also shorted some more NASDAQ 100 futures at 21,500, okay? So I have a big short position. And if the market rises over the next few days, you can literally laugh in my face, all right? I am that confident that the market is gonna take a huge dump. And I think a lot of my friends who are invested in the market are really underestimating how bad this market is gonna dump. It is gonna be very, very serious, okay? Probably not as bad as 2008, 2009, but pretty bad, all right? And I expect the S&P 500 to probably lose 50% from top to bottom. And also after the dump, you don't expect a V-shaped recovery. The markets will basically bounce at the bottom for a long period of time because so many people have been hurt on their investments and they no longer have money to get back into the market, okay? And also the economy will be really bad. And also everyone should take into account that the economy might go into recession by late 2025 and everyone's going to cut spending. So people who are running their own businesses, they're going to get hit on their businesses as well, all right? Okay, so how can we make money out of this, all right? So basically, for those who sell, I would say shift money into bonds. Okay, bond yields are still going up, which means bond prices are coming down. And again, because of the debt ceiling and jitters over the debt ceiling, and also because inflation is coming back. But if the economic data starts becoming really bad because of this bubble bursting, and we have a slowdown which turns into a recession, then bonds will pick up again and start rising probably in the second quarter of 2025. So bonds, in my opinion, will be a very good investment. So basically park the cash that people generate after selling out of their stocks and cryptocurrencies. And also precious metals will do the same thing. Now I think gold and silver will dump along with the rest in the short term as yields rise. But again, in the second quarter, once the economic data is starting to turn really bad, then the Federal Reserve will probably be forced to then cut interest rates more again, even though they projected that they were going to cut fewer times. They'll probably have to make a shift in their strategy. And then as interest rates come down again, then gold and silver will probably do very well, all right? Those are my opinions. I am not basically advising anyone to sell or do anything, okay? I'm so confident that I'm selling futures in the futures market, all right? So if anyone wants to copy my strategy, then if they're a trader, then I would, go and sell futures yourself. It's your own choice. But again, let me stress that this is not just my personal view. Warren Buffett definitely knows what's going on, and he's a much smarter investor than everyone else. And also, you should download the chart, basically, which basically outlines how these markets work. Go on Google Images and find psychology of a market cycle. Okay, find that image, and it will show you basically how badly the market will tank and why a lot of investors right now are basically in denial and not wanting to sell because they're still in a state of euphoria. And once the market starts tanking, they're going to go into denial and react very, very slowly, if at all, and not sell their investments. And then they're going to get wiped out after a few months, okay? And all their profits are going to turn into a loss. This is in a classic bubble popping situation, which has happened many times before in the history, all right? So anyway, my channel is still going to be about nutrition and lifestyle and how to live a healthy life. However, as this bear market unfolds, which I think was going to take 18 months to 2 years, I will be making video updates on the markets and how to basically respond to the bear market, okay? So make sure to like the video and subscribe to the channel, and you can laugh in my face if the market starts shooting back up. However, if the market does indeed take a dump, I would suggest everyone really gets out of the market and lock in their profits, which I'm sure most people have, and then take a good 2-year break, or go and buy bonds or buy precious metals and see what happens, all right? And that is not a trade recommendation. That is purely up to you. I suggest you do the research yourself. Go and Google Dow 1929 crash chart. Go and Google Nikkei 1990 crash chart, and go and Google NASDAQ 2000 crash chart, and you will see my point, all right? So anyway, I don't want to be a bearer of bad news since everyone wants to have a good time over the festive season. However, I think it's very valuable for me to at least give everyone a warning and a heads up so they know how to react when the market truly starts melting down, all right? Hopefully it doesn't, but I'm betting on it, all right? So up to you what you want to do, okay? Remember to subscribe to the channel, all right? And then you can see what happens over the next 18 months or 2 years. And also you get to laugh in my face if I'm wrong.